Are you struggling to build wealth? In this video, I'm going to give you tips on how to make your money work harder for you. Today, we're diving into one of the most popular investment strategies out there, dollar cost averaging, or DCA for short. I'll show you my unique take on dollar cost averaging and how I use this to buy AI stocks and cryptocurrencies at great prices to take full advantage of the investment opportunity. I will give 3 real-world examples on how I use this so you can use it to build your wealth. If you want to learn how to build wealth, hit the subscribe button and click the bell notification icon so that you'll be notified every time I upload new content. What is dollar cost averaging? An example of dollar cost averaging is where you invest a fixed amount of money at regular intervals, regardless of what the market is doing. This can be weekly, monthly, or even quarterly. This way you're consistently making the investment over time to build a core position. Let's say you're investing $100 every month. Sometimes the market will be up and sometimes it will be down. But you're buying at all these different price points. Over time, this averages out the cost of your investments. This also helps if you don't have large amounts of cash saved up. Instead, trying to build this cash pile and then waiting, which can cause you to miss out of potential gains. Also, it can be nerve-wracking to invest a lot of money at once, and it may be easier mentally to invest over a more extended period. Dollar cost averaging helps your money grow. Investors who use this technique do see considerable investment growth over time than if they had invested a lump sum and tried to forecast market drops. I've adjusted this model to suit my investment needs in AI, stocks, and cryptocurrency assets. When I look to invest in these, I've calculated the buy-in price point for each asset, which, if the market drops and the asset price moves into this price point, I'll apply my unique take on dollar cost averaging to begin the purchase of the assets. For example, from May to December 2022, Meta stock price kept dropping from $200 all the way down to a low of $90. I used my buy-in price point of $130 to determine when I should start my purchases, and then every time the stock dropped further below this, the bigger the buys got. For example, Meta hit my buy-in stock price point of $130 in October 2022, which I began purchasing the stock, and then it continued to drop to $120, which I purchased more. Then a large drop to $100. Again, I purchased even more, and then finally to $90, at which point I made my largest purchase. I was able to dollar cost average my purchase of Meta down to an average purchase price of $102, confident in the fact that Meta was not finished, as most of the financial press was saying at the time, and that its value would return, which it has done today, October 2024, to $575. Another example was Google during the bear market period of March 2022 to November 2022. The stock price, which had a 20-to-1 stock split during this time, so I will refer to the current chart price to keep things simple, kept dropping from $144 all the way down to a low of $84. I used my buy-in price point of $120 to determine when I should start my purchases, and then every time the stock dropped further, I took this as a perfect opportunity for bigger buys. Google kept dropping to eventually bottoming out around $84, which I was lucky enough to buy twice during November and December 2022. I was able to dollar cost average my purchase of Google down to $96, confident that this great AI stock would rebound in 2023, which it did to almost $140 by December 2023. AMD was also an excellent example of using my unique take on dollar cost averaging during the period of January and October 2022, where the stock price began the year at $156, dropping all the way down to a low of $55. I used my buying price point of $119 to determine when I should start my purchasing, and then every time the stock dropped further, I purchased even more stock. I was able to dollar cost average my purchase of AMD down to $76, confident that this great AI stock would rebound in 2023, which it did to almost $130 by June 2023 as the AI megatrend continues. This strategy allows me to purchase AI stocks at great prices instead of trying to guess the bottom of how far a stock will drop, which you'll only know after the event has happened. Just to be clear, I only use my unique take on dollar cost averaging on AI stocks, which I have researched and believe that they are the ones that can take a full advantage of the AI megatrend and cryptocurrencies such as Bitcoin, whose unique advantage of only having 21 million available coins will ensure that any drop in the asset price will be temporary and that it will continue over time to all new highs. We've all been there. When markets are up, we get excited. When they're down, we panic. It is important to understand that emotions can play on investors' mind and hurt their ability to build wealth. To avoid this, I ensure that I only invest in high quality AI stocks such as Meta, Google, and Nvidia. Only invest in Bitcoin for cryptocurrency investments. When I see stocks go below my price buying point, to buy even more stock, as the greater the deviation, the greater the buying opportunity. Enjoy watching AI stocks go red, as I know that I'm getting bargain prices rather than panicking and selling. And finally, ignore the financial media's doom and gloom, which act as a distraction. Trying to guess the bottom of an AI stock price will leave you missing great buying opportunities, as the temporary drop will bounce back and then you will have the emotion of fear of missing out, which will then prompt you to buy at incorrect levels. By using my unique take on dollar cost averaging and applying the emotional tactics I've discussed, mean that I can enjoy huge profits when the stocks bounce back. Before I tend to make any asset purchase, I determine how much risk or exposure I wish to have. This aids my unique take on dollar cost averaging by having an investment price target for each stock I wish to accumulate into. For example, if I wish to have an investment target of $10,000 for Meta during 2022 and purchase the stock using my unique take on dollar cost averaging for the following amounts, this meant the total purchase price was over the initial investment target of $10,000 to $11,770, which in percentage terms was 117% invested, with an average purchase price of $104. By having an investment target, it gives me an indication of whether I'm overexposed during the asset purchase, and if so, by how much. I then can fall back to my research into the asset to determine if I'm comfortable in this exposure, and if so, can continue to overexpose my purchase of the asset. I like to be invested between 50 and 85% of my asset target exposure, which allows for an additional accumulation during panic events. Afterwards, I plan to trim down my exposure when the asset inevitably recovers. To sum up, as with all investment strategies, it's essential to consider the potential returns as well as your risk tolerance. My unique take on dollar cost averaging only works as an investment strategy if it aligns with your investment objectives and you follow my guidance in this video. I'll only invest in assets that I believe in their long-term prospects and look to build my exposure into the asset during the corrections or bear markets. Now I want to hear from you. Drop your thoughts in the comments below. And if you found this video helpful, don't forget to like, subscribe and hit the notification bell for more tips on how to build your wealth. Until next time, take care.